Monday, October 30th. I'm gonna upload this to YouTube later. So today is almost like day 3 of the crash, of the big crash. I mean, essentially we've been going down since October 15th. We're just not really seeing it that much. But when you pull it up on the Heikin-Ashi candle, you can see it better. So we've been bearish since here, and it's like half a month of bearishness. But people have been ignoring it. They really haven't been looking at it like that. And I think I actually talked about it around this time. So, you know, on the weekend update of the 17th, we talked about how the last week of October was extremely bearish in 2016 because of the uncertainty going into the election. And, you know, we wouldn't be surprised to see it happen again. So that was on October 17th when we talked about it. That was about probably here, give or take. And that's when we kind of started to drop. We're seeing the downward momentum going just because, you know, they don't know who's gonna win. It's hard to position the market, and Trump keeps pushing that he's the one that holding the market up. So we'll really see whether that happens or not next month. Let's see. So the QQQ just pull back to the yellow line. I mean, I remember there was a time when the QQQ was so strong. We didn't even know what bearishness was for the QQQ. Every time the QQQ used to hit this green line, the top line here, it would bounce. That's when it was so strong, man. We didn't even know what bearishness was. And then it started to test the second line. Now it's about to test the third line. The money is not in the market right now. It could come back. This could be a good opportunity to buy the dip for a chance of recovery. I personally won't do it on the Qs because I'm kind of scared of it. Maybe Google or Apple, because Apple had okay earnings, but Google had really good earnings. Amazon probably had the best earning out of all of them and probably provided the best value opportunity because it had a great earnings and it kind of dropped. The dollar index is still climbing. It didn't climb as high as that drop that we had in September. So that means we could still have a little bit more drop left because we still got till the 4th, which is Wednesday. So we could still have uncertainty on Monday and Tuesday, Wednesday, and maybe next Friday might be the perfect buying opportunity until the market finally gets a correction. I'll probably cover NEO in a little bit, but I mean, the NEO is gonna be in relation to the whole general market, right? If the whole market is bearish, it's eventually gonna cause a lot of fear and uncertainty, and people are gonna start to unload. The good thing we see is that it's kind of technically hitting almost a double bottom here. Financials almost hitting a double bottom around 23. So financials at 24. This is the XLF financial sector. But like I said, I don't think we hit that double top on the dollar index yet. I know that the dollar index will go down for sure once they decide that we're gonna get a stimulus coming out, and it'll probably be up here in the $100 something range, and market will probably climb back to the all-time highs again when that happens, which is like 360s here, 358-ish. So this was one of the SPY charts we drew a while back. So this was drew around the September time. We drew this line here. This was the 319 area. So this is support from here, and kind of bounced it right off it. And I'm still kind of waiting for us to hit this area. If it touches this area, and it bounces off here, that would be a very clean bounce. That would be a 4-time testing the support, and you know what? Like, if it bounces off here, then we'll have a really solid area, because there was a lot of sweep to the 320 level too. But if we break down this line, we could have much further to go, because there's a gap area further down here. And so this is one of the gaps here. So it's really hard to play this, because it's just a matter of time waiting for the market direction. So at times like this, the best way to play is just to wait for, find a stock that you like, and identify the range on the stocks. And then what you do from there is you open a strangle on it. You open a call and a put position, and kind of pray from there. This is where I would go heavier on opening the strangle around the 3, if SPY hits 320. So you could open a strangle on Apple or any stock you like. So like if I were to open a strangle on Apple, let's assume that if it hits like 103 area, right? Let's assume if Apple hits the 103, 102 area, well, we can assume that it can climb back to our red line over here, which is 116. So I open a call for Apple, like for January 15th, for $116 or $115 strike. No, I didn't open any strangles today. I only opened calls today. Because I didn't feel like we were there yet. But if we hit here, this is where I probably open the strangle. If we hit 103 area on Apple, I would probably open a strangle to $115. And then on the downside, I would probably open the strangle to maybe like $95. So whichever direction it goes and we get a confirmed move, then you can close the other side, or you can wait for one side to go up to 100%. You can even do something on, you can do it almost on any stock. You can do it even on Neo. You can open a strangle to, it's at $30 right now. You can open a strangle to $40, and then open a strangle to 20. Open the call to 40, open the put to 20, and by January 15, you should see a big move one way or the other. But usually on stocks that you think could make that move, and stocks that would actually drop with the market more or less. So last time that happened, we did it with, last time in September, over here, I did it with Nike. So it was $113. I opened 125 calls, and then I opened I think like 95 puts, and it went up to 200% for me. But that's also because their ER was good too. So if the market was to drop and we broke under the 320 level, you know, this is a good support right here, right? So if market were to drop, it would just come down really hard. It would come down to the $95 level. If market were bullish, it would continue to move back to 125. So that's what you do when you're really uncertain and you're not sure which direction the market wants to go toward. But some stocks don't move that much, so you gotta pick the right strike. You gotta pick something that's close enough within the range of movement. So something like Target's probably really good too. If you know, if Target drops back to, let's say, 146 area, could probably open a strangle, do a call to 155, and then do the put to 135, because it's either gonna go back to here, or it's gonna go back down to here. CGC was pretty flat today. That's interesting. AMD is another interesting one that you can strangle on. Huge mover. But yeah, this is what I'm looking at for SPY. I think it could bounce. I'm just not sure if it's the right time yet. You can also do a starter position and start scaling in, and then wait to see if it pays off. You know, if it drops some more, you add position. Let's see, what else is in the news today? So Apple is down pretty hard. US reported a record of more than 89,000 cases yesterday. It's pretty crazy. Midwest states are seeing a much worse outbreak. New Jersey is going crazy. Germany is wish they made a better decision earlier. So they said that they already got 60% of the ballot apparently. Walmarts are pulling guns off the shelf. Jack Ma's and IPO open today. Apparently that's going crazy. They say Go is having a bad run apparently, but I think Go is another opportunity coming up. Go was actually pretty close to hitting the double bottom. For some of the gold stocks, it's already bounced. Because at the end of the day, if inflation continues to go up, the value of gold is going to increase, thus giving us a buying opportunity. It's also hitting pretty good support here. Next level is the 1744 level. And then after that is 1539. But if it even gets that low, that's 100% guaranteed buying opportunity. Some of the other gold stocks you could look at is Barrick Gold Corp. There's also NEM. But that's pretty much it. I think a good decision right now is to mostly stay in cash position. Wait until the market gives us a better opportunity. You could start buying some position now to get slight entry, but don't put all your portfolio in. At times like this, you definitely want to be on the sideline a little bit, and just kind of watch it from there, because we haven't hit that perfect area yet. It's all about hitting that perfect area sometimes. If we get the perfect entry, then it'll be a huge profit. We don't have to worry a lot. If it breaks under it, we can just take stop loss. Yeah, I agree. I think Go is a bargain under 1800. That's going to be a huge buying opportunity. And then I think that's pretty much it for the market review today. There's nothing much to figure out from here. Hey Freezy, thanks for following, man. Appreciate it. And then if you guys want to check out for updates, you can follow my flow page here, or Twitter, where we try to update a watch list every Monday. There's some value opportunities I'm also looking at this week. Some stocks I'm looking to pick up on the drop are Activision. So it broke under. We charted this descending triangle here, and as you can see the other day, it broke under. So usually when it breaks under a descending triangle, it usually drops a lot further, which it did on the earnings report. But overall, the company is extremely bearish. They had a really good earnings report. They talked about having more monthly active users on a lot of their games. I think with Fortnite also pulled their game off the Apple Store because their lawsuit and stuff. So Call of Duty is one of the Activision games. I think they're gonna capture a lot of market share. So it should be easy money from there. So I think it's definitely a buying opportunity. We're seeing some supports here. So technical analysis is mostly built on previous resistance becomes support area. So if these are areas where people buy or sold, then it becomes a support, right? So that's around the 75 area. That's where we're at right now. Further below that would be 68. You know, and then 64 and so on. But definitely, like, if you even hit 68, that's 100% buying opportunity, because they guide it up very strong too. I reviewed the quarterly reports and they guide it very strong. But that's it for this week. I'm gonna record this time here. I'm probably gonna end the YouTube video at here. Let me restart this